What's going on, guys? Dusty here, and I quickly want to go over my inverse fair value gap method, strategy, whatever you want to call it. I got this from ICT and kind of just used it in my own methods on how I like to trade it, and let's get right into it. The highest time frame I'm going to use for this video is a 30-minute because I want to prove to you guys that you do not need to know the daily bias at all on these type of moves. All you have to know is the sell side and where sell side is and where buy side is, during the previous session. On this one, it was very clear for today, and let's get right into it. So going into open today, we had a gap down, right? Market open down here in New York session, and then on NQ, we also had a similar thing. What I noticed was this S&T, NQ making lower lows, ES was starting making highs. So this is giving me a confirmation to, okay, we're having a bullish S&T here, and I'm waiting for this structure to get broken through, right? This is a break of structure, but in this case, since we're in a downtrend, this is your change of character, right? We're in a massive downtrend since overnight. This break right here is going to be your change of character. Now, a lot of people are scared of long down here. That's fine. It was choppy. I didn't really like longs down here either. But what I noticed is that we have two fair value gaps now, right? We have this bearish fair value gap from overnight, right, that we rejected. We rejected this off of open. And then we had this bullish fair value gap here off this break of structure. Both are valid, right? Now let's put all the pieces together. What are we having here? We got a sweeps early in the morning, right? We're gap down, and now we're having a change of character, right? That's supplying us the bullish bias, right? I'm creating my bias within the day, right? NQ, same thing. Okay, both indices are getting expansions above this area where we're rejecting, right? We had this change of character. Now, what you want to see is one of these fair value gaps to get violated to get your bias. And this is where it's important to know where the liquidity is. So right here, this is the London high, technically, right? It's a London open. And after when London opened, we started knifing. So this was my area for sell side liquidity. Or buy side, excuse me. Buy side liquidity. I was targeting these London highs because the London open and previous session highs and lows act as liquidity. So we're targeting this as the buy side. We already swept all types of sell side down here, right? Let's go in the 1 minute. You guys can see more clearly. We swept these sell side levels, right, on the NQ as well. And NQ was actually making a lower low while ES was making a higher high. So we had an S&T as well at that area, which helped me with my bias even more that we were going to have a move up. So let's go to the 30-minute back here. And now what do, right? If my area of liquidity, right, for London open had already gotten taken by the time we retraced back down, I would not have taken the trade. But now I understand that this bearish fair value gap got ran through. If we come down to this area, it is going to be a very high probable area for a bounce. There is no selling in this area, right? The algo's not selling no more because it already did what it needed to do. It took out that liquidity level. Now we displaced above it, come back down, and now we have multiple areas of confluence. What do we have here? Not only, let me go to replay mode while it actually happened. Not only do we have London highs, right? We have these equal highs up here that got formed on the 30-minute chart. Multiple fair value gaps that were bearish on the 5 and 15 also got ran through. This, I used a 30-minute because it was the most obvious area that got ran through. So we had a huge displacement up above this fair value gap. Change of characters happening. We have equal highs. We have London highs still. So that's 3 pieces of confluence you can use already right there to get a solid bias going into this trade. Now what do? It's simple. I draw out the fibs from the fair value gap and I look for the 0.5. And this is usually where I alert my plays, right? I go something like this. I'll put up a long position and I'll set it up like this, right? Have a appropriate stop wherever it may be. This order block could be used. The bottom of this fair value gap could be used. Wherever you feel comfortable at. My play was something around here, a 2-to-1. And this is where I send out the plays. I'm like, okay, I'm looking for a 0.5 entry. As soon as it taps, I'm getting that entry. What do? Keep in mind, this is a wick on the 30-minute chart. So let me actually go back one more time. Let's go back here. Let's go on the 5-minute chart. This area that I have marked out is the 30-minute inverse fair value gap. Let's go down. And what we are getting here is these wicks on the 5, on the 1, and all that good stuff. Now, a lot of people were like, oh, this equal lows down here too. Why not take this as a short retracement? Well, what's going to be more probable? 5-minute equal lows, right? Or we have a 30-minute inverse fair value gap, we have a change of character, and we have London buy-side liquidity still. So you got to put all those pieces together and understand which is going to be more high probability, right? There's equal lows and there's equal highs, but there's more things to support that we're going to move up on this move instead of down. Like I mentioned earlier in the video, the change of characters, all that good stuff, these inverse fair value gaps. And even right here, when the S&T cleared up, you can see that once we had this break, we are getting these fair value gap moves up. We're getting these order block moves up. So it's very nice. I kind of understand at this point, as soon as market pushes here, right? Even if you have no bias at this area, as soon as the market's up here, you understand that, okay, these gaps that are bearish are getting ran through. We have London sells or buy side still, excuse me. This is going to be a day where we're going to wait for that retracement and move back up. Now, it did take a long time for this to actually hit that buy side liquidity area, but nonetheless, I had the utmost confidence that we were actually going to get this moved to this upside here, get past through that 89 level, and that's what we got on ES and NQ. I'm going to just go back over it real quick. I don't want this video to be long, but kind of go over in the most simple and effective way. If you have no bias, wait for an inverse fair value gap to form, because that confirms that the other side is not likely no more, right? It's not probable. There is a chance we still get ran through, but trading is a game of probabilities. What is the probability that we are going to get the move up versus down after a change of character, after SMT, after we have the London high still? And this is why knowing where areas of liquidity is pretty much the only thing you really need to know when it comes to inverse fair value gaps. At least that's how I trade them, right? The only thing I need to know is where liquidity is. If liquidity got taken already, right? If these London highs would have got taken up here, I would not have taken the trade. Simple as that. But we came down. I was like, okay, this is where they're going to pick us up. And this is the PM session silver bullet, right? A lot of people think silver bullet is only for one session. No, that's incorrect. This is a silver bullet. We ran up. As soon as after lunch hour, around this 10:30 area, what do we get? This is a silver bullet entry to take us back to the upside. So just like you trade your AM silver bullets, same thing with the PM silver bullet. In this case, we just happen to trade back into a 30-minute inverse fair value gap. And let's see what NQ was actually doing at this area here. 10 a.m. bouncing off this order block. Also, this had this inverse fair value gap as well. So perfect trades. This is, the TGIF setup that ICT always talks about as well. Beautiful setups across the board on ES and NQ today. And that's how you could form a bias intraday, even if you don't know the bias overall, the overall sentiment on the 1 hour, 4 hour daily chart. A little bit longer of a video, but I really want you guys to go through this. And if you guys don't understand, shoot me a DM on Twitter, Discord, whatever. I will get back to you. I always see the messages. It takes me a while to get to everyone. But please, if you guys have any more questions on this, let me know, because this is what I use a lot on my trades. I love using inverse fair value gaps. It confirms my bias for the intraday, and then you just get your entries. You set your stops wherever you want to set them. Usually, 5 or 6 handles. Today was a little bit more volatile, so I did set a little bit, further down. And this is pretty much how we catch the moves on ES and NQ. So I hope this helps, and until next time, I'll catch you guys.